Welcome to this presentation from Australian tax experts, specialist tax lawyers and accountants. Today we are covering a situation that many taxpayers and business owners will face at some point in their lives, receiving an audit notice from the Australian Taxation Office. This presentation walks through 6 clear, practical steps for responding to an ATO audit notice, from acting within the right timeframes to engaging the right professional support. The decisions you make in the first days after receiving an ATO audit notice can significantly influence the final outcome. This guide explains exactly what to do and what to avoid. Let's begin. This slide sets the context for why acting correctly matters. There are 3 numbers worth highlighting. First, the standard time limit for lodging an objection to an amended assessment is 60 days. Miss this window and you may lose your right to dispute. Second, administrative penalties on a tax shortfall can range from 25% to 75% of the tax avoided, depending on your conduct. Third, and this is the most powerful incentive for acting early, where a taxpayer makes a voluntary disclosure before the ATO commences an audit, that base penalty can be reduced by up to 80%. On the right, you can see 2 very common mistakes to avoid. The first is ignoring the notice, hoping it will go away. It will not. The second is responding immediately without professional advice. Well-intentioned, but potentially very damaging. Below that, you can see the 3 main processes the ATO uses: a review, a formal audit, and an amended assessment. We will cover the difference between these on the next slide. Here is a high-level overview of all 6 steps. We will go through each one in detail on the following slides, but I want you to see the complete picture first. Step 1. Do not ignore the notice. Time limits apply, and missing them will almost always worsen your position. Step 2. Understand what type of process you are dealing with. A review, a formal audit, or an amended assessment. Each carries different implications. Step 3. Do not respond to the ATO in any form, not even a phone call, before you have taken professional advice. Step 4. Begin gathering your records, but do not send anything to the ATO until your advisor has reviewed what you plan to provide. Step 5. If you already know there is an issue with your tax affairs, consider whether a voluntary disclosure is appropriate. Step 6. Engage a specialist, a tax lawyer or specialist tax accountant, not a generalist. None of these steps are complicated, but each one matters. Let's look at steps 1 and 2 in detail. Step 1 is about timing. The ATO operates within strict statutory timeframes, and so must you. Depending on the nature of the correspondence, you may have a limited window to respond, request documents, or lodge an objection. Read the letter carefully and note the type of review or audit being conducted, the specific tax years under examination, the response deadline stated in the letter, and the name and contact details of the ATO officer handling the matter. Do not file the letter away intending to deal with it later. Later often becomes too late. Step 2 is about understanding where you actually sit in the ATO's process. There are 3 distinct situations, as shown in the lower card. A review is the ATO's least formal compliance activity. It involves seeking clarification on specific items and does not necessarily mean the ATO believes something is wrong, but it can escalate into a formal audit if they are not satisfied with your response. A formal audit is a deeper examination with significantly broader ATO powers, including the ability to issue formal notices, access business premises, and contact third parties such as banks. An amended assessment means the ATO has already made a decision and is issuing a revised tax bill, triggering a 60-day objection window. Understanding which situation you're in determines your options and your urgency. Step 3 is the single most important piece of guidance in this entire presentation. Many taxpayers respond to an ATO audit notice by calling the ATO officer directly, wanting to appear cooperative and transparent. Others send documents without having them reviewed, or write explanatory letters that inadvertently concede positions they did not need to concede. These well-intentioned actions can cause serious harm to your legal position. The call-out box on the right carries the critical message. Let me read it directly. Before you respond to the ATO in any form, including a phone call, speak to a specialist tax lawyer or tax accountant. This does not mean you are doing anything wrong. It means you are protecting your legal position, which is entirely your right. Why does this matter so much? 3 reasons. First, ATO officers are experienced professionals who conduct these reviews regularly. Second, their questions are often carefully worded to elicit specific information. Third, an answer that seems perfectly reasonable to a layperson may, in the context of tax law, significantly narrow your defensible position. That third point is the one that catches most people out. A casual, genuine, accurate answer can inadvertently close off legal arguments that would otherwise have been available to you. Step 4 is about preparation, and a critical constraint on that preparation. Begin collecting the records relevant to the period under review. As you can see on the left, this includes tax returns and financial statements, bank statements and transaction records, invoices, receipts and contracts, evidence of any foreign income or overseas assets, and correspondence with advisors or third parties relating to the items in question. Organising your records early gives your advisor the information they need to assess your position quickly. However, and this is the critical point from the right panel, do not send documents to the ATO until your advisor has reviewed them. Documents provided voluntarily can define the scope of the audit. In some cases, providing more than is strictly required can open new lines of inquiry that the ATO would not otherwise have pursued. Before anything is provided to the ATO, your advisor should review all documents for relevance, identify any items that might trigger further inquiry, and ensure that you are providing exactly what is required and no more. Step 5 applies in a specific state's and very important situation, where you already know there is an issue with your tax affairs before the ATO has raised it. If you have unreported income, an incorrect deduction, or an undisclosed overseas asset, the question is not whether to address it, it is how and when. The penalty comparison on the right illustrates the financial stakes very clearly. Let me walk through it. On a $100,000 tax shortfall, a taxpayer who makes a voluntary disclosure before an audit commences may face penalties of around $5,000, roughly 5%. A taxpayer who discloses after the audit has commenced may face $25,000, that is 25%. And a taxpayer who makes no disclosure and is assessed at the highest conduct level faces $75,000 in penalties, plus general interest charges that have been accumulating throughout. The critical point, as shown on the left, is timing. Voluntary disclosure must be made before the ATO independently identifies the issue. Once the ATO has opened an inquiry into the specific matter, the full penalty reduction is no longer available. And importantly, voluntary disclosures should always be made through a professional advisor. The way the disclosure is framed, the information included, and the context provided can all significantly affect the outcome. A final step, and arguably the most consequential one. Not all accountants and not all lawyers are equipped to handle ATO audit matters. Tax audit defense requires a very specific combination of skills: a deep understanding of how the ATO conducts its audits, knowledge of the relevant tax law, and the ability to negotiate effectively with the Commissioner's representatives. The 3 cards illustrate what distinguishes a specialist. The first is the ability to combine legal analysis with precise tax calculation. This is the combination that builds the strongest possible case. A legal argument without the right numbers, or numbers without the legal framework, will both fall short. The second is specialist experience. This means knowing how the ATO operates, what its published guidelines say, and what arguments succeed in practice, not just in theory. The third is a track record of results. At Australian Tax Experts, we have defended clients in ATO audits across income tax, superannuation, GST, and international tax matters for nearly 2 decades. The case studies on our website document the outcomes. The call-out box at the bottom makes the broader point. A generalist accountant or commercial lawyer is likely to be working at a disadvantage against an experienced ATO officer. The caliber of your representation directly affects the outcome. Let me summarize the 6 principles we have covered today. Step 1. Act promptly. Do not ignore deadlines. Time limits under the tax law are statutory and non-negotiable. Step 2. Know your process. Review, formal audit, and amended assessment each carry different implications, different rights, and different options. Step 3. Take advice first. Do not speak to the ATO or provide documents in any form before you have taken professional advice. Step 4. Gather your records, but do not send anything until your advisor has reviewed what you plan to provide. Step 5. If you have a known issue, consider voluntary disclosure. Proactive disclosure before the audit can dramatically reduce, and in some cases eliminate, penalties entirely. Step 6. Engage a specialist. The quality of your professional representation directly affects the outcome. A tax lawyer, working alongside a specialist tax accountant, provides the combination of legal and financial analysis that the situation demands. The earlier you engage professional representation, the stronger your position will be. So, should you contact Australian tax experts? If you have received an ATO audit notice or review letter, yes. If you have received an amended assessment and are considering an objection, yes. If you are aware of an issue in your tax affairs and are weighing up voluntary disclosure, yes. If you are concerned about offshore income, foreign assets or undeclared income, yes. If you have outstanding tax debt with accumulating general interest charges, yes. The earlier you engage professional representation, the more options you have. The sooner we are involved, the stronger your position will be. Australian Tax Experts is a team of specialist tax lawyers and accountants who work together on every audit matter. We have defended clients in ATO audits, disputes and voluntary disclosure matters for nearly 2 decades. Our results are documented in the case studies on our website. We would be delighted to have a confidential, obligation-free conversation about your matter. You can reach us through our website at australiantaxexperts.com.au. Thank you for your time today.